Holy smokes, everyone. Boy, do I have an absolutely huge update for you today. What the central banks are doing, what's happening in the economy, what's happening in the markets, and more importantly, what's going to happen in 2024, because there has been some huge changes to the macroeconomic picture. We're going to discuss all of these today. Now, just go ahead and type 1 in the chat if my microphone is working well, and then we'll go ahead and get into the news, the facts, and the data, or the data, depending on where you're from. So, first things first, what we need to talk about, what happened this week, is the huge speculative frenzy that the Federal Reserve created, and I think they made a big mistake. So let's go ahead and pull this up. Look at this. Fed holds rates steady and indicates 3 cuts coming in 2024. Now, this was absolutely ludicrous because at all their meetings, they've been saying inflation's still too high, we're going to stop inflation, we're going to really tackle inflation. And they've been bluffing all along. They've been lying. And I think I've found some reasons why there's going to be big rate cuts next year, because I think it's not going to be pretty. But the market loved this. Gold, silver, Bitcoin. Bitcoin hasn't really rallied this week, but gold and silver specifically went on a huge rally. The dollar dumped. And a lot of people weren't expecting such a dovish comments by the Federal Reserve. They weren't expecting these, but now, again, this has caused some market mania. And I'll go ahead and bring up a chart of the dollar. We can see here, I'll go ahead and move myself so you can see the chart. When this news came out, the dollar absolutely plummeted. This is the DXY, the dollar index. It went from around nearly 104 and it plummeted all the way to 101. Okay, so yes, while the markets may love this, your dollar and your purchasing power is going to shrink significantly in 2024. Now, a lot of people have come out and they're criticizing the Fed, saying, what are you doing? Inflation is not over. And I'll get into some alternative inflation statistics in a moment. And they're risking undoing all the good work they've done, or shouldn't really say good work, but the progress they've made from inflation being extremely, or should I say prices going up extremely quickly, to price increases are still happening, but they're happening at a slower rate compared to the peak. So Fed sparking irrational market optimism over potential rate cuts, former FDIC chair says. And that's exactly right. What this has caused is caused interest rates to plummet, so people are going to go ahead and take on more debt, and they may be more likely to spend. And when people make profits on their stocks or whatever assets they have, they go out there and spend in the real economy. But again, the Fed is in a big pickle here because of some things that are going to be happening in 2024. Not just the FDIC, but also Fed's Goolsbee says too early to declare victory over inflation, and that's exactly right. Jerome Powell came out of nowhere and just said, yep, inflation's over, we're going to start cutting next year. But again, central banks have no credibility. You cannot listen to what they say. You have to follow the money and look at the little hints they're doing, okay? And you have to look at the picture, because I think this is really the main reason why they're going to be cutting in 2024. Look at this. The U.S. national debt is about to hit $34 trillion. That's 34 trillion reasons why they're going to be cutting, because the U.S. government and the banking system, you saw the banking system nearly imploded. We saw lots of smaller banks implode, but the bigger banks would have been in big trouble if they kept interest rates at 5%. And again, the government can't afford interest rates at 5% because the interest costs alone is over $1 trillion. So what else is happening? Look at this. U.S. Congress passes huge $886 billion defense budget for 2024. Now, what I think, unfortunately, is going to happen in 2024, these global conflicts are going to escalate. We may even see another one. Hopefully, China doesn't get involved. But military spending, again with a debt, is going to explode. And the Federal Reserve, I think, in 2024 is going to monetize the debt. That's where they cut interest rates, whether inflation is still high or not, so the government can keep on borrowing. And at a last resort, if bonds, if no one wants to buy bonds, the Federal Reserve can come in there as a buyer of last resort and start buying up the debt. Okay? Now, look at this. Fed to start cutting rates mid-year in 2024 with high chance of soft landing. So not only are they cutting that because I think what's happening with the debt and what's happening with military spending, but I think the Federal Reserve sees a huge economic contraction that is coming because we are now starting to see the lag effect. The lag effect takes 6 to 12 months. We're now getting that. We're seeing the economic data shrink. We're seeing the US consumer, unlike the mainstream media saying they're saying the US consumer is so strong. I've got a lot of data that proves that's not the case. And so I don't think it will be a soft landing. I think it will be a hard landing. And that is what's going to cause the Federal Reserve to do these rate cuts. So they're saying some are saying February, some are saying March, but according to this, the Fed is going to start cutting rates in June, and respondents see the probability of a soft landing at 47%, up from 5 points from the October survey. And they lowered their probability of recession in next year by 8 points to 41%. But again, when they keep changing the definition of a recession, it's hard to, really take these surveys and the data they put out serious. But this is another reason why the markets are so irrational right now and so bullish, is because the Fed, they've penciled in 2 or 3, but the market is trying to push the Fed. Again, the market pushes the Fed, the bond market, the yield curve, that's really what the Federal Reserve follows. They expect there could be 4 or 5 rate cuts next year. And I think it's all going to depend on how bad the economy gets, because look at these next 2 stories. Underwater car loans signal US consumers slammed by high rates. Again, I think this is one of the reasons why the Federal Reserve will be forced to cut, because a lot of people got through 2023 only on credit cards. The cost of living got so hard that they were forced into debt, but eventually you get maxed out. You can't take on any more debt. So negative equity on automobiles is at their highest in more than 3 years, with high prices and borrowing costs hitting owners. But not just this. This was a statistic that just came out, which I thought was absolutely crazy. 40% of student loan borrowers missed their first payment since COVID paused, officials say. So now we all know in October, people had to start repaying their student loans. So again, with their credit cards maxed out, them defaulting on auto loans, now having student loans, I think after this holiday rush, we're going to see a big contraction in spending. Now, as inflation falls, again, according to the CPI data, I'm going to show you some alternative data in a moment, corporate America won't rush to pay the price. So the Federal Reserve signaled this week that it may cut rates in 2024, okay? Not just for the stock market, but mortgage rates, auto loans, and all forms of consumer debt. But prices throughout the economy won't be so quick to go down, with corporations experiencing pricing power that has been rare in recent decades. So unlike the Federal Reserve saying, I don't think inflation is going to come down very quick like they're hoping. Americans are finally seeing real income gains. What do you guys think about that? Do you think you're seeing real income gains, or is it just income keeping up with the fake inflation data? Because if CPI or CPI is 4% or 3%, and say even if you are getting a 3 or 4% pay rise, real inflation, I'll show you in a moment, is more like 8 to 10%. So they're continuing to boost the consumer and give companies more reason not to give back marginal gains. So I think people, their psychology, they're used to seeing prices go up, and I think corporations will keep on lifting prices in 2024. But I'll go ahead and move myself here. This is the real inflation, everyone. And this is how they keep on scamming the population, because remember, inflation is taxation. So the way they used to record inflation in the 80s, if they still use that metric, inflation would still be 12% right now, compared to, the 4% or 5%, whatever the CPI is now, or the core. Okay. Now, type 1, if you think this is much more accurate, 12% compared to 4 or 5%. But then what they did is they changed it again in the 90s. And you can see here, even in the 90s metric, it's nowhere near as the 80s, but it is still much higher than the CPI today of around 8%. So everyone, I know we're thinking, well, okay, what does all this economic jargon mean for you in simple terms, and what can we do to protect ourselves in 2024? Because there is going to be lots of money printing going on in 2024. Fiat currencies, I think, are on the brink of extinction. And again, this is not, fear, doom and gloom. If you do your history, every single fiat currency ever created, 100%, they've all failed. When the US government in 1971 went from the gold standard to the US dollar, that was a form of their currency manipulation. They created failure. That was a failure in 1971. And I think in 2024, 2025, we're going to see more fiat currencies fail and the US dollar lose significant amount of purchasing power. Now, what did we see this week? We saw silver. Look at this chart here. It went absolutely parabolic from $22.60 an ounce all the way up to, it reached a high of around $24.26. Also, gold is still performing strong, over $2,000 an ounce. Bitcoin, it is down roughly, but that's normal. It's gone from around 26,000 to 44,000, so it was due for a pullback. So I do put these three in the same category as sound money. They can't just print more gold. They can't just print more silver. They can't just make miners, mine a trillion Bitcoin. There is limited supply. There is no central authority that controls it, like central banks, because people, again, like I said, they're going to print like crazy. But like what you saw when the dollar crashed, I think gold, silver, and Bitcoin will do very, very well in 2024. And you cannot just survive in 2024, but I think you can thrive, because during every crisis, there is always opportunity. And for those people that have done this play, you've done very, very well over the past 6 months. So some people that say, look, why do I watch your content? It's too, you're a perma bear. No, people, there are opportunities. And if you use that strategy with gold, silver, Bitcoin, you would have massively outperformed the S&P 500. So what do you guys think about all this? Let me know down below. You're awesome. I'll see you all in the next video.